Welcome, Pramod. Good to see you after a long time.
Nice to see you.
Acha, Babu, now the idea is, as always, you have to teach me what is going on. See, really, because these days I don't pay that much attention to the market, but my ears are there now. Few things that I've been noticing, but I haven't really been able to figure out. One is, for a long time, maybe 6-8 months now, volatility across the board just seems a little low, lower than I feel it should be, given the amount of uncertainty in the world. Second thing that has confused me, not confused me, but that I've noticed just recently, is that copper, which I've always felt is sort of a very key indicator, has collapsed. Right? It's fallen below some this, that, and the other. And the third thing, which I haven't been paying attention to, but as I think about it, is the most shocking, is the euro here. I mean, slowly, it's almost at 140. My belief was that, they were saying the euro is going to fall apart, then everything came together. And fundamentally, and my thinking was, the only way it will resolve is if the euro subsides, gets weaker, and Greece, Italy, and everybody get a little happier. So please tell me, sir, what is going on?
See, so far as low volatility, maybe markets are a bit complacent. Means that everything is going to be okay, because as we understand, low volatility means the daily variation in this daily return variation is very low, whether the trend is up, down, or sideways. So it means that, okay, as you say, these disturbing factors may not have come to the surface for quite some time, and like the US stock markets have gone to a decisive new highs, well over 2007 highs, but perhaps with low volatility, because they go up narrow range.
And there's been no drama. In the past, when the US market went up, everyone was tali bajawing.
So, long back, I think George Soros or someone said that short-term volatility will rise when long-term trends are about to change.
Short-term volatility will rise?
When long-term, because
that's very boring. So that means right now short-term volatility is not rising.
But it will rise. How long? The markets don't like low volatility also. Because usually near the tops, there is a process called distribution. When suppose the markets are to change a trend now from the top. Now the big guys who will sell at the top, and the small guys they want to suck in. If their quantities are so large, if they try to sell all at once, markets will crash. So they sell a little, and the general is buy on the dips. So the small guys come, because he has missed the entire rally, so he comes. Again they sell a little, again they come. So then when the last potential small investor has bought and there is no one else, then the real slide will start. Whenever it is. Within S&P, whether it happens now or 1900 or wherever it is, or in Sensex, really speaking, it should have gone much higher, the way FIs have been buying last 2-3 days. But with domestic investors, institutional investors telling the Sensex has gone a little sideways.
So just last 2-3 days.
Last 2-3 days. Because
but
last Friday
also it's gone up so much, even though the economy is in the gutter.
So it's let's say, I feel that our normally they say that how the stocks are valued is they compare with some risk-free yield. Now in our country the risk-free yield is 10-year.
Right.
But the US yield is 2%. So for the FIA, that may be the thing with which they work. They may be factoring likely depreciation of the rupee and so on. And that may be the reason why the S&P is nearly 16-17% or 20% over the 2007 high. Whereas our market is only 4 or 5% over those highs.
Okay.
So they have factored in that possible rupee depreciation and so on. So that's the reason. Otherwise, which would have been near 24,000 to 25,000. Why we haven't gone that high? The copper thing is that.
No, but wait. Before you come to that, so what you're saying is that the low volatility, right? This is my sense also. If volatility is, volatility is mean reverting, and so the longer it stays low, the higher is the chance that it is going to turn.
Yes.
right?
Yes.
And sort of, and as you were saying that when short-term volatility starts to rise, it could be a signal that a long-term trend is changing.
Correct.
Then I think before we go to copper, we should think about if short-term volatility starts to rise, what are the long-term trends in the market that could turn? See, because in point of fact, it's really hard to see any trend in the market. What is the, I mean, one long-term trend could be, could it be like 100 years of dollar weakness? Is that a long-term trend, or is the dollar no longer considered to be falling? See, what is the let us say it happens, and let us say a long-term trend is going to turn. What would be the long-term trend that could turn? And we've got to think pretty out of the box for that.
One, see, if we think of the US markets, which are the very big and deep markets, okay, I mean, the stock market is one, but if we look at US treasuries, there is a bull market since 1980. The yield on the 10-year bond, which at that time peaked at 15%, came as low as I think 1.5% in
1.8,
whatever in July 2012. Now it's about 2.7 or something. Now even a mini bear market correction or whatever you call it, there are even before the 2007 2008 crash and all, they must have been, because the Fed funds was around 5.25 or 5% or so, and the treasury 10-year yield must have been higher than that. So if the 10-year yield starts moving towards that, we will see, I mean, there itself, that could be a lot of people trying to get out of the US treasuries, US stocks falling because in comparison to those yields, and internationally other stock markets which have gone to record highs will also begin to correct.
So is that is the one trend that you can think of right now? That is the one long-term trend in the market.
Right.
Nothing else? I'm just curious. I'm trying to think. Does anybody else have any ideas? What is the long-term trend in the market? If we say there is going to be a turning point in a long-term trend, and if US treasuries turn, what that would also mean is that US growth is coming on strong, or not?
There could be, that
See,
could be one.
Inflation is nowhere.
No, that could be one possibility. What you say is correct. That about one thing is US growth, other is this Fed tapering, that I don't know how much impact that is going to have. But from time to time, this China and all, they keep on threatening. They said that they don't want to accumulate any more dollar reserves, foreign exchange reserves. And according to US data, that means which February trade report data, that China sold 48 billion of US treasuries in December.
They sold?
They sold. Their total holding was little more than 1.3 trillion.
I thought it was nearly 2 trillion.
Total reserves are 3.6 trillion.
I thought treasury was peak only 1.3,
1.36 or something, 1.316. And they sold 48 billion.
That's a small amount. That's about 3-4%, but still.
Yeah, I mean for them to sell, see, because they can't sell a large amount even if they want, because then the dollar will fall.
So this was December.
This was December.
January figures are not out.
They will come little later in this month. Yeah.
So that is something to watch.
Yeah, that is something to watch. And again, this trade deficit that
China showed.
Yeah, it could be a temporary aberration. But one analyst said that means apart from that, it was way beyond all polls and expectations.
Right.
One person said 6 sigma miss.
Right, I read that. You sent me that article.
Yeah,
right,
so one has to see that what's going on behind the scene. What exactly? Because one way to avoid further dollar accumulation is to run trade deficit. There was also talk that maybe they are accumulating gold, and slowly they want to make yuan eventually, maybe 10 or 15, I don't know what is the time frame, a reserve currency and so on. So if they have less trade surplus, more deficit, to that extent they don't have to buy dollars. And this last number of years, ironically, that although S&P and all have gone up, all stock markets have gone up, the Shanghai Composite has fallen 60%.
In the last 3-4 years?
No, 7 years. 2007 peak was 5,000 and now it's around 2,000. So whatever hot money has come from US into China has not gone into stocks. It's gone into land and maybe things like metals, copper, and mainly land. And there is a shadow banking system. And reportedly, these dollars which come in get converted into yuan under the carry trade. According to one report, they are reported as FDI or as export revenue. Some sort of accounting jugglery. And the People's Bank of China wants to curb that either by weakening the yuan and so on, all that. So that is what is also going on.
But so then, coming back to this point, if you're saying that, the long-term trend that may change, if indeed it does, could be that the long bull market in US treasuries. So that would mean basically US interest rates would be rising. But parallel with that, you're talking about the dollar falling,
Yes,
right?
yes.
So normally when currency interest rates go up, the currency goes up. Not always, I fully understand, as we've got a billion examples in the past. So, I mean, this is what you're suggesting as one possibility, that US, I mean, if there is a major shake-up in the world, this is one way, right? Which would be the dollar, the treasuries going up, not so much driven by US growth, driven because, inflation is nowhere to be seen, but driven more by actually an old story, right? 5 years ago, 8 years ago, everyone was saying one day China will, see, that story about China is getting edgy and will dump its holdings was really in those days a response to dollar weakness. Remember when dollar was weakening and weakening and weakening, and people were saying, hey, maybe the euro will replace the dollar, and China is getting upset because their assets are, right? So at that time there was talk about China may dump the dollar, right? Now what you're saying is that could be the driver. What you're saying is it's gone long enough and now China needs to, and if you say they sold 48 billion in December, those January numbers would be very important. If it turns into a steady, 30, 40 billion a month of their selling treasuries.
That would show their intention.
Right.
If this could have been just one of some needs or whatever, but it could also mean this 48 billion, suppose they are through weakening of the yuan, they are trying to force some unwinding of dollar yuan carry trades, in which case also the dollars would leave China.
Right.
In which case also
there'll be less demand for dollars, basically, what you're saying.
Their reserves are coming down, so they may have sold US treasuries for that reason also. So exactly what is the story, we will have to see what will happen in the next couple of months. It means it not, because they hold such a large amount that their dumping US treasuries is like what that Japanese term harakiri.
Right.
Isn't it? In the past, so many years back, even Japanese have contemplated, but they have
never
not done
it.
Not done it. But Japanese are honorary Americans.
But that's changing, Babu. That's a very good point. They're honorary Americans. But I think that's changing because America also, if you look at what's happening in Ukraine, etc., right? I mean, America just ain't what it used to be, right? I mean, people in the old days, America just looks in your direction and says, yes, sir, But I mean, nahi hota hai, which is probably all part of it. But so basically, I mean, but we've come to this point, but is that really your view? That forget about the drama, but that the dollar will weaken? Is that really what you think? It's already damn weakening. I can't believe it's at under 80, on the index.
Yeah, correct.
And I come back to this madness about the euro going up to nearly 140, right? And then ulta, copper falling. Now, copper falling would mean strong dollar, but euro rising means weak dollar. Matlab kya hai?
See, so far as the index is concerned, dollar index you said about, it's near, now it's fallen under 80.
Under 80,
79 or something. Somewhere below, I mean, one may call it technical, whatever may be the fundamental factors. Earlier it had gone to 72 or 75, something like that. So, outsiders, foreigners, not wanting to hold dollars anymore, for whatever reason. One could be the stock market, when US asset markets start falling, whether it is stocks, whether it is US
Bonds.
treasuries, then the dollar is going to weaken.
Ah.
Interest rates can't go any lower. Earlier, say if US interest rates fell, then the dollar would weaken.
Ah.
But they are near zero, short term. Fed funds rate is 0 to 0.25.
Ah.
So it is basically a sell-off in US asset markets, bonds and stocks, mainly bonds, because external holding is more than nearly 5.7 trillion, or that sort of thing, of US treasuries.
What numbers? Trillion.
Trillion, mind-boggling. Yeah.
अभी बिलियन तो आता है जाता है.
Their total federal debt is 17 trillion.
Ah, no, I know.
So that would depend on that. You know, Fed that way, by and large, I mean, so far as monetary policy is concerned, we will come to the euro thing. That Fed is always in the most unenviable position because they have to do a balancing act. On the one hand, promote growth and employment, and also maintain price stability, control inflation. Right now, because inflation is low, they have been able to do this quantitative easing and expand their balance sheet by a very large amount and so on. On the other hand, European Central Bank and prior, I mean, they succeeded Bundesbank. They are usually, they have only one mandate, control inflation. But still, they have so much problems right from the beginning, because the euro, when it was born, so to say, with 11 countries joining, itself that what they call one size fits all interest rate policy, it has never worked really for everyone, because the main economies are Germany, France, Italy, but main architects are Germany and France. So, and ECB head office is in Frankfurt. So usually more weightage is given to the Germans, naturally.
Should be also.
Because in the early days, German inflation was very low, economy was very sluggish, but Ireland was having 8% inflation. So they would have needed higher interest rates. But ECB couldn't do much. They said, you take care of it fiscally, fiscal austerity.
Right.
And now you see many countries, some countries are, Greece is in deflation. They have got their 10-year bond yield is around 7%.
Wow.
Yeah. And debt, fiscal deficit to GDP is 9%. All problems on the fiscal side. So not much possibility to give fiscal stimulus and whatever problems they had earlier. So ideal thing, if suppose they had a central bank, I mean they were still having the drachma, the Bank of Greece or which they could have done quantitative easing. Now the logic, now the next logic is European Central Bank should do it. Why aren't they doing it? Because their hands are tied. Because in February last month, some German plaintiffs or some case was referred to the German Constitutional Court, which is the highest court in Germany, on the legality of what Mario Draghi said they would do whatever it takes to save the euro through these outright monetary transactions, that is bond buying program. And the German Constitutional Court said that that violates the German constitution. It amounts to debt monetization.
Which is not allowed by the German constitution.
And deprives, undermines principles of democracy, whatever, it's a very, and deprives the German parliament of fiscal sovereignty.
That I can understand.
Should it be forced to accept losses under the scheme, whatever. So with all that, but they have not pronounced any verdict, because this is not just a local German issue. So they have referred it to the European Court of Justice, which is yet to consider and give a verdict. But what happens is, since the Germany is the most important player or member of the Eurozone, and the way they have been, I mean, even now perhaps after nearly 90 years, they remember the hyperinflation. When $1 went to 4.2 trillion, those marks.
But I can't believe they do though, remember it.
Yeah.
I mean, human memory is not that.
Yeah.
All those people are dead here.
No, but that is the way they
The
initially
Bundesbank was created.
Bundesbank mandate and now ECB mandate.
Mm.
So unless that is changed and the Germans permit it, because European Court of Justice could take whatever decision, they may support the European Central Bank. But then we need to see how the Germans parliaments, government, Chancellor
Reacts,
Merkel,
right.
German parliament